The latest letter issued by Warren Buffett to Berkshire Hathaway shareholders is raising alarm bells amongst many investors. Shocking details have emerged about the businesses Berkshire is operating. While most of the analysts only focus on the investment portfolio of Berkshire, no one's paying attention to the other $100 billion worth of companies that Berkshire owns 100% of and is operating these companies themselves. Let's differ from these analysts and analyze the business and investment portfolio of Warren Buffett's Berkshire Hathaway simultaneously. This is not an attempt to paint any negative picture, but an honest attempt from my side to provide investors with detailed analysis of Warren Buffett's businesses and investment portfolio. Why there are sudden swings in Berkshire, and what are the alarming reasons for these wild swings, and what are its implications for investors like you and me? We all know who Warren Buffett is. According to Buffett, Berkshire was responsible for paying about 1% of all tax collected by the U.S. government in the last decade. Buffett is one of the world's most successful investors with a net worth of $108 billion. Warren Buffett started investing at a young age, buying his first stock at age 11 and his first real estate investment at age 14. Buffett studied under Benjamin Graham, the father of value investing, and his time at Columbia set the stage for a storied career. He still lives in the 5-bedroom house he bought in 1958 for $31,000, drinks Coca-Cola, and dines at local restaurants where a burger or a steak is his preferred table fare. His most famous quote is, "A simple rule dictates my buying. Be fearful when others are greedy, and be greedy when others are fearful." In the last 6 months, Warren Buffett is making very interesting business and investment moves. Everyone's discussing the 13F filings and stocks Warren is buying and selling, but no one is discussing the businesses Warren Buffett owns. Even Warren himself considers Berkshire more of an operating company. In his latest letter to shareholders, one repeating theme is how the company has been transitioning from an investment portfolio to a collection of operating companies. Just a few days ago, Berkshire Hathaway swung to a loss of $22.8 billion in 2022 from a profit of more than $90 billion in the previous year. Market volatility and investment losses on derivatives contracts totaling more than $67 billion played a big role in that. The most surprising thing was, however, the company's operating income. The company's operating earnings, exclusive of capital gains or losses for the fourth quarter of 2022, fell to $6.7 billion, down 14% from the previous quarter. The businesses Berkshire operates include insurance and reinsurance, utilities and energy, freight rail transportation, manufacturing, and retailing. In Q4, Berkshire earnings from insurance underwriting fell 34% to $244 million. Geico Insurance Unit posted pre-tax underwriting losses of $1.88 billion in 2022 as customers filed more claims and the severity of accidents increased. Rail earnings fell 12.8% versus a year earlier to $1.47 billion. Berkshire is the largest shareholder in 8 of the largest companies in America: American Express, Bank of America, Chevron, Coca-Cola, HP Inc., Moody's, Occidental Petroleum, and Paramount Global. And some of them write big dividend checks. Berkshire Hathaway's 13F stock portfolio value increased from around $296 billion to around $299 billion. Their largest 3 holdings are at around 60% of the entire portfolio. The top 5 positions account for around 76% of the portfolio: Apple Inc., Bank of America, Chevron, Coca-Cola, and American Express. There are 47 individual stock positions, many of which are minutely small compared to the overall size of the portfolio. Buffett reminded investors that he and longtime partner Charlie Munger, 99, were business pickers, not stock pickers. Buffett's economic outlook view remains gloomy because Treasury yields have soared to their highest levels since the 2008 financial crisis after an aggressive Federal Reserve rate hike cycle. 6-month and 1-year yields have topped 5% for the first time since 2007, while the benchmark 10-year Treasury yield sits near 4%.
Interest rates are to asset prices, sort of like gravity is to the apple. when there are very low interest rates, there's a very small gravitational pull on asset prices. And we have seen that getting played out. I mean, people make different decisions when they can borrow money for practically nothing than they made back in 1981 and 2 when Volcker was trying to stem inflation and the government bond rates got up to 15%. So interest rates power everything in the economic universe, and they have some effect on the decisions